Wow, have a look at the market volatility continue as at Thursday afternoon. The Dow Jones Industrial Average closed up over 400 points. On the daily candle, the Nasdaq reached above the 100-point figure, very close to 105, and the S&P 500 up very close to 50 points on the daily candle. Have a look at the most recent bullish move. If you're having a look, or if you're speaking about or referencing market volatility, this is the perfect picture. We have seen quite a decent correction over the past week and a half. Most recently, we have seen an incredible bullish pop to the upside. Overall, the real net movement going back to late November 2014 is pretty much nil at the moment. You can see these dojis and spinning top candlesticks, a couple shooting stars, some hangman candlesticks. That is exactly where we have closed today's trading candle. Now, before we get into some analysis, I wanted to make the point that as at the end of this trading week, expect market participants and all-round general market volume to really subside, to really diminish as we move into the festive season. Again, Christmas is just around the corner. The 25th, the market will be closed. We will also have a shortened trading session on the 24th. It is a half day. And of course, for New Year's Day, we will be closed on the 1st of January 2014. Historically, this period of time for the market is very, very quiet. So if you are looking to enter into trades, first of all, make sure that they are worthy of your time and money, especially with what the market is doing at the moment. Again, showing really bipolar tendencies. It is erratic, it is volatile, it is all over the place, and a lot of stocks at the moment are starting to give us framework. They're giving us those upper highs or those higher highs and lower lows, giving us the structure for where the next set of breakout trades is going to stem from. What I'd like to say and what I'd like to encourage you to do over the next week and a half, for those of you in the pro analysis class, and for those of you who are going to have a little bit of time for reflection, to reflect possibility and of course some of the trades you've placed in 2014, the ups and highs of your trading account, it's a really good time to go back and practice back trading. It is a tool here on Trade Navigator. You can go back to any point in the past, of course, and you can go through and retrospectively trade the market day to day in a couple of seconds and become very, very powerful, very good at the technical analysis which I teach. I do encourage people to do this at the end of each year, if not as much as possible. But during this time or during this seasonal downtime, it's a really good opportunity again to reflect on 2014, to find out what worked for you, what didn't work for you, and to say, or to at least align yourself, write down some goals for 2015 and targets which you want to hit in the world of trading. It's a very, very good time to be doing that if you're not actually trading the market. Now, again, volume is going to diminish. A lot of people, again, historically take, of course, holidays, take vacations this period, this time of year. So I'm not really expecting too much in the way of the market. Yes, I will be technically trading the market. I will be keeping an eye on what the market is doing. But for the most part, I do encourage people to get away, to actively reflect on what they've done, to refresh themselves, and to come back and attack 2015. Okay, now let's get into some of the analysis. I've referenced, of course, the bullish bounces in all three of the US markets. A couple of stocks which I want to pay close attention to. First of all is Amazon. You can see these two candlesticks coming in on Thursday and also Tuesday. It did gap up quite significantly today, but you can just see, although the markets are rallying very, very strongly on the daily, Amazon is still struggling to maintain these lower levels, these higher levels, and you can see that we're starting, or at least setting up, another stair-step continuation pattern. Ultimate target is down here about $285 a share, 289. If we break 292 on Friday, it is a decent short opportunity given the relative weakness in this stock in the face of such a strong market over the past 3 days. Amazon is set up very, very nicely. Baidu, again, very bi-directional on this particular trade. We're bouncing all over the place. We're still holding this macro pivot point. I'm looking at this trade above 235. Again, I'm sort of asking myself the question, do I want to get actively involved or aggressively involved in the market leading into Christmas, and understanding again that volatility is going to drop, or at least the volume of market participants is definitely going to drop. Generally this time of year, I'm exiting out of positions and really winding down my trading for the year 2015. This is, of course, a personal decision which you have to make. Caterpillar, again, dancing all around that pivot point down here, about $90 a share. This has been an incredible trade from the breakdown at 98. Again, we're starting to build those upper and lower limits. This takes time, ladies and gentlemen. It's a good time, of course, to familiarize yourself with swing trading and understanding that there isn't a trade every single day of the week and year. As a swing trader, they do take time to materialize. That time, of course, is just a couple of days. Caterpillar is definitely moving in that direction. Disney's still hanging about at the all-time highs. It still hasn't technically broken down. It's looking pretty weak still. It does have a very, very strong case of bearish divergence. When we change to, of course, the oscillating indicators and change to the weekly, we are setting up very, very nicely for a reversal. It hasn't come yet. If it does, we're looking to short below the lows established this week on Disney. Again, very neutral. I'm happy to go long on this stock above the all-time highs, but at the moment I'm sitting on the sidelines based on what the market is doing. FAS is very close to our target once again, around 127. We did have a bullish entry at 124.80. Coming into the week, we did not expect it to hit. I'd be very surprised if people actually took this bullish trade. I, for one, didn't. It's not saying that it's not a good trade. Just didn't really expect the market to bounce this ferociously. We did expect at least the market to bounce, but to see an up day of 300 points followed by another up day of 420, I congratulate any trader out there who predicted that move and capitalized on that move with mitigating the risk to actually get into a position such as that. Facebook today, again, it's still battling with that upper trend line. Very decent move. It looked as if it was starting to break down on the Tuesday. Since then, we've had an inside day Morobozu candlestick followed by another shaved top Morobozu to the upside. We're still contending and battling with this open window. It hasn't filled yet. We're very close to doing that. These trade triggers are really going to materialize themselves stronger over the coming days. This 74.65 bearish entry is a gimme. It is literally a gimme. If we break below 74.49, watch the base of Facebook fall out. Having said that, when we come up to this pivot point, traders are going to make a decision. Are we going to break out or are we going to reverse? And the closer we get to this apex over here, leading into, of course, the end of December and early January, we are going to see an incredible break in the price of Facebook. This is a very nice trade moving into 2015, one in which I'm very excited about trading. Google today had a very, very strong gap up. You can see it left us with what we call a hangman candlestick. There was intraday selling pressure. We did close near the highs. This is really mixed signal in the way of the daily candlestick. There's not enough structure to be entering into Google at the moment. It is going to take a couple more days. Halliburton gapped up. However, we did close the day with a bearish counter attack. You can see that we closed near the highs or near the close of Wednesday's candlestick. Mixed signals again at a support level. You can see, although the markets are bouncing bullish, Hal is really struggling to gain momentum to the upside. I do think we are going to see continued upside move short term on Hal up until really this gap around $44 a share. This is really the location where I'll be paying attention to. That was meant to be an exclamation mark on Halliburton. There's no real decent trade setup. We are getting structure, which is important, but if you're looking at trading this bullish, you are fighting, of course, the bearish trend or trading counter trend, and doing that comes with inherent risks. Netflix again gapped up, very similar. It is a bearish counter attack daily candlestick trading against the close on Wednesday. You can see we gapped up, we traded high, we failed, and then we continued, or we at least sold off intraday. It was pretty minimal, but again, price is really respecting support on many stocks as we break down these markets. Starbucks again, look at this, it gapped up. But look what happened. We traded right back down intraday. We closed only 41 cents below yesterday's close, but this candlestick is still incredibly bearish, especially in the face of a 400-point update on the Dow Jones Industrial Average. Starbucks is still going to shake out possibly very violently in this location. We do have increasing sell volume, so although we are gapping up, people are still selling the price of Starbucks down. Is Starbucks overvalued? Only the traders are going to get the right answer on that based off the daily chart. Okay, so stay tuned to price on Starbucks. This is something which is set up very, very nicely as we lead into 2015. Tesla today, look at this, up almost 4% or a little over 4%. I spoke about this bullish engulfing candlestick at support down here, about $200 a share. Look at what we saw today. I'm just going to move these old triggers which we've entered into to the left so you can see the daily price action. We had a gap up, and unlike many of the other stocks in our list, it actually held this upper price. You can see here, we opened at about $211, I do believe. We closed at $218. Instead of seeing a dark candlestick at this location, pardon me, my taskbar has just come up, but instead of seeing a dark candlestick or a gap trying to be filled, we held, which is very, very bullish. This is definitely a continuation type of trade based off this one perfect textbook bullish engulfing candlestick pattern at this macro support level. This is a good entry to say, look, start buying long in Tesla. No, it's not what I do expect to see. And what I want you to look at is this declining exponential moving averages. Look at this. You can see that we're battling the 10 and the 20 at the moment. We are also coming up and we're retesting old support, which is going to act as new resistance. So it's really the flip side of the market at the moment. With the general markets, we've broken out, we've come back down, and we're retesting that old resistance as new support, and we're starting to see the bounce. With Tesla, we've broken down below old support, we're bouncing now, where if I change the color, we're retesting that old support, which was in October and November 2014, as new resistance in December 2014. We are going to see a definitive response by traders as to whether this is going to be a long-term buy signal. I will reference this over the weekend in Pro, or if in fact we are going to reverse and trade to the downside. We will set this up. You will see daily candlesticks tend to set up in this location. You'll see shooting stars or engulfing candlesticks right around this pivot at 221. So stay tuned, traders on Tesla. There is going to be a very nice bi-directional trade at the moment. We're still sort of graphing the chart. Now to conclude with, we have Twitter. Twitter today is still moving sideways. I can see what is about to unfold in Twitter. What we are going to sort of set up is a Bollinger Band squeeze. If we continue to stay between $35 and $38, watch these bands really constrict price. It's going to set up a bi-directional trade. And given what the market's doing at the moment, again, the resilience of these three markets, it would not surprise me at all to see finally a little bit of long-term, or at least intermediate buying pressure and directional movement come into Twitter. We can see old prices at least up to $44.50. My ultimate target moving forward on Twitter is really 50. I like that psychological round number. And if we're trading down here at 36, you have to understand that we've got $14 of potential upside, which can be made in Twitter very, very quickly, leading into trading 2015. So this is definitely a stock on my watch list. I've had a lot of people also email me in about GoPro and also Alibaba. They want to try and get this on the list. I do like both the stocks. They're sort of in a toothing process at the moment. They're not ready to be traded yet. We don't have enough price action on the daily. But there is a lot of, I guess, volume in these traded stocks. They are optionable, which is definitely enticing for me personally, as I like to, of course, trade options 100% rather than stock. I do see these being added onto the list, just not yet. We need to give them a little bit more time. But by, I guess, January 2015, once we can at least work with the exponential moving averages and have a bit more data in the way of the MACD, the RSI, and the stochastics, I will consider re-adding these into our top 13 list. If that is the case, if you want both on, we'll have to remove both stocks. So email me at success@pivotpoint-trading.com as to which stock you would like me to remove in order to include Baba or GoPro into that top 13 individual trade list. So I hope you have received this video in good faith. If you have any questions, email me success@pivotpoint-trading.com. Again, I encourage you and challenge you to spend your time wisely over this festive period, over the holiday season, over Christmas, and of course New Year's. Spend at least a little bit of time back trading, conditioning yourself in the markets, but again, spend as much of your time as possible with friends and family. Enjoy yourself, get away from the market. Try and forget about the daily moves on the market or the real-time moves on the daily market. You're really not going to miss out on much. If anything, it's a really good time to refresh yourself, recharge, and come back reinvigorated for 2015, ready to go. All right, ladies and gentlemen, that is the Thursday afternoon market recap. All the best. If you have any questions, again, email me at my personal email address. Other than that, I'll see you over the weekend in that pro analysis class. All the best. Goodbye.